I'm John Hanna for CDTV.net in New York, and we have Mark Luschini, Chief Investment Strategist for Janney Montgomery, joining us from Pittsburgh. Thanks for joining us, sir.
Glad to be here. Thanks, John.
Yeah, it's a snowy Friday afternoon here in New York. How's the weather out there, sir?
Well, actually, it's sunny, and with a kind of a dusting of snow on the ground, it makes for a rather pretty January.
Okay. Um, Wanted to find out. I spoke to you a couple of days ago about the topic that we're going to be discussing today, which is pretty much the healthcare and the baby boomers. We can continue discussing this thing now. We just wanted to let our listeners get in as to what your thoughts are.
Mm-hmm. Well, obviously the demographic pull of the baby boom generation is something that people have been thinking about and talking about for a long, long time. Of course, we know that the leading edge of the baby boom generation began to turn 65 years old January 1st of this year. And so it's going to have important ramifications as that kind of pig in the python of some 76, 77 million people age over the next 20 and 30 years. For that reason alone, it justifies concentrating on what in the healthcare space is worthy of consideration for investment in light of taking advantage of that strong demographic theme, but of course also being cognizant of the issues related to the healthcare reform and how that might weigh on different subsectors of the healthcare market.
With that kind of potential as to what's going to happen like in the next couple of years, especially, when is the impact of the baby boomers going to have an effect on the healthcare industry?
Well, I think it's going to be substantial. As we know, ARP, what used to be the American Association of Retired Persons, is a fairly powerful lobbying group, and one that didn't used to be that significant in size by sheer numbers in membership. But now they're mailing to people 50 years old and older. So as that huge population of the United States continues to grow not only in size among those who are over 50 years old, but as well in terms of their ability to lobby through ARP and other mechanisms as a group, is a powerful voting contingent that I think is going to have a lot of influence in what's said and done, both legislatively in terms of what comes through healthcare reform, some of which has even been yet to be written and will be expected to be launched in full by the 2013, and or what, if anything, is repealed out of the current health reform legislation that is already in place. And of course, we hear a lot of talk about that coming from our new Congress.
Yeah, there's been a lot of more talk about it as of today. Especially with the new Congress has started their sessions already. No, the question is that what do you tell your client? Let's say the client has $1 million, and they like dividend growth investing stocks or dividend paying stocks. I mean, if they're going to be waiting around for a couple of years, what do you recommend? What kind of stocks or companies do you recommend or industries?
Well, we've been talking about this now for some time because obviously interest rates have been low, and so you have a whole generation of investors who look for income to either be a part of their portfolio to bring stability to the results or to produce income to subsidize retirement lifestyles. And so we've been a proponent of dividend-paying stocks for a long while. That said, we've also not only been a proponent of dividend-paying stocks, but high-quality, large company stocks, many of which are household names that can be found right here in the United States, and coupled with the fact that this is a subsector of the equity market that didn't participate in full in the rally that we had in equity prices from the March lows of 2009, and as a consequence, while their profits have continued to grow, their valuation hasn't necessarily expanded. And as a consequence, we think they're very inexpensive from a valuation standpoint. So just to give you a couple of names, certainly one in the healthcare space, for instance, is one of only 4 AAA-rated companies in the United States, and that's Johnson & Johnson. So, in the form of a high-quality, globally geared company that's going to participate in growth that just doesn't come from the United States, but rather growth around the world, it's a terrific brand name and at the same time a company that should deliver decent growth and pays an investor to wait. The yield on a Johnson & Johnson today, their dividend payout, is equivalent to about a 3.45% yield. Coincidentally, the 10-year Treasury bond, for instance, today is yielding 3.3%. So you have a chance to own one of the best franchises in America with a yield about equivalent to that of a 10-year Treasury bond with a call option on a stock that will be worth maybe more 10 years from now than it is today, which a 10-year Treasury bond doesn't give you that ability. Other names of interest would include a company in the financial services area. Allianz is a large insurer based in Europe, but it happens to own a massive and important asset manager located in Newport Beach, California by the name of Pacific Investment Management Company, or PIMCO, which runs the largest bond fund in the world. And so the baby boom generation is not only going to be thinking about using income, but also how they can exploit or optimize those sources of income. And we think that the asset management business is going to be a place where monies are going to go to help baby boomers to figure out how to make those investments work both for growth and or for income. So Allianz would be another name. And last but certainly not least, just going into the technology sector, which we know is in continuous evolution, but a great name there. And oh, by the way, one of, once again, only 4 AAA rated companies in the United States is one called Microsoft. And Microsoft several years ago began paying a dividend for its first time, and today the yield on Microsoft is about 2.26%, and you own a terrific franchise that has, in our opinion, still good growth prospects.
If and when the healthcare bill comes into effect, any stocks that might do well or any stocks that might do not so well?
Well, certainly within the healthcare area, a couple of things seem to stand out a little bit more than others that may be impacted negatively by healthcare reform. And, of course, that would be the pharmaceutical companies, which are already facing the headwinds of patent cliffs, which are well known at this point in time. But we also know that part of healthcare reform was an effort to get lower prices through to healthcare participants, and that is going to be operated by not only providing competition, but in addition to that, basically leveraging the buying power of the government to go to the big drug manufacturers, for instance, and have them price their products more cheaply than are currently being offered in the market, and or to try to better expose alternative methods of providing medicinal delivery to participants that are currently kind of flying under the radar of the healthcare system because they just don't have the economies of scale that the larger companies have. So, that's an area that we know is going to be kind of subject to some fits and starts along the way until we know more fully what the impact of that is going to be. On the other hand, with the prospects of having 32 million more health people insured under health care, you also have expanded your theoretical list of customers. So that's going to be a bit of an offset to the squeeze that will be put on, for instance, large company pharmaceuticals. In addition to that, though, you might expect to see areas like hospitals do well. So some of the publicly traded healthcare facilities ought to benefit from, again, that expanded opportunity set of the 32 million uninsured perhaps now being eligible for coverage. So that's just a couple of examples of perhaps winners and or losers as more of what healthcare reform is going to mean becomes more visible.
Now, one of the things I was kind of waiting to hear from you would be the retirement homes community. Is that a growth sector? Or, what are your thoughts about it?
Well, if you look at, you'd have to participate in that typically through a real estate investment trust that is a company that is built on accumulating and or developing retirement income communities or perhaps, healthcare facilities for retirees. You would expect that to be a good industry in which to participate because, after all, we are in general an aging society, and so to take advantage of people that are likely moving from their homes to maybe downsizing into a retirement community and or an assisted living facility. And now the way a lot of these properties are designed is to take you from your home to a carriage-like facility that's adjacent to a semi-skilled nursing facility. So basically takes you right through the daisy chain of moving from independent living to assisted living to full-time support without necessarily having to leave the property. And that does seem to be a very appealing concept for a lot of individuals, and as a result, we would expect to see further growth in the property development of those types of companies.
Any other closing statements with regards to this healthcare issue and baby boomers?
Well, healthcare spending as a percentage of GDP in our country has just risen to close to 18% from 16% just a few years ago. So it's important in terms of what it means to our economic activity. It's also an important sector within the equity markets, for instance. The healthcare sector is about 11% of the S&P 500, for instance. So it's a big sector in which there's a lot of subcomponents that investors need to consider as a way to take advantage of that spending that's expected to be a part of our economic activity for some long period to come. But in addition to that, as it relates to the baby boomers, clearly they're going to have a lot of needs going forward, including not just what may treat them from a medicinal standpoint, but also what might help to benefit them from a quality of life perspective, as they're not only expected to live longer, but wanting to live much healthier lives over the duration of their lifetime. And so there's a lot of ways to come to investing in healthcare outside the conventional hospitals and pharmaceutical companies, and that's why we even like areas in the biotech and medical device area that'll help to extend the quality of life for a large but aging population in the United States.
That's Mark Luschini, Chief Investment Strategist for Janney Montgomery, joining us from Pittsburgh, and I'm John Hanna for citytip.net in New York.